Hi, I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture. Thanks for joining us today to discuss the results from the July 2018 Ag Economy Barometer survey. Each month, we survey 400 ag producers around the nation to get a better perspective about what they're thinking with respect to the health of the U.S. agricultural economy. This month's results are a sharp departure from the previous months. The index fell to 117 from a reading of 143 a month ago. That was the largest one-month decline in the barometer since we started collecting data in the fall of 2015. The decline in the barometer was really driven both by a decline in people's perception about current conditions in the ag economy, as evidenced by the decline in the index of current conditions, which fell from 138 to 99 in July, but also by a decline in future expectations. So the future expectations index fell from 146 to 126. But the biggest portion of that overall decline in the barometer was driven by the decline in people's perspectives about current conditions in the ag economy. Looking at some of the individual questions that are used to generate the ag economy barometer, one of those questions is, would you say that your farm operation today is better off, worse off, or about the same compared to a year ago? And you can see the percentage of farmers that said that their operation was worse off than a year ago skyrocketed in the month of July relative to June, hitting 55% versus 38% that responded that way in June. If you turning to the general ag economy, we also asked people about their perspective about whether or not in the next 12 months financial times are going to be good or bad. And again, you can see the big jump in the percentage of people that were expecting bad times in the ag sector, moving from 46% in June to 61% in July. And at the same time, we saw a decline in the percentage of people expecting good times. That fell from 26% in June to 19% in July. We also ask each month for people's perspective about farm investments and whether or not now is a good time or a bad time to make those kind of investments in their farming operation. And we'd been seeing some improvement with respect to the percentage of producers saying it was a bad time, had been declining for several months. But notice that on the July survey, it jumped from 60% saying it was a bad time to 73% saying it was a bad time. And at the same time, the percentage of people indicating it was a good time to make those large investments fell from 26% to 20%. When you combine those results, looking at both the good time and bad time responses on a combined basis, that was the most negative response we'd received to that question since March of 2016. We also asked people periodically about their expectations with respect to farmland values. And we have a reporting here of a percentage of people expecting higher farmland prices in the 12 months ahead, and those responding that they expect to see lower farmland prices. And notice that as you look at the July numbers, the percentage of people responding that they expected lower farmland prices jumped to over 30%, actually 31%. And a month ago, that was at 21%, so a 10-point change in 1 month. And also, as you look at the data on the screen, notice that that takes us back to where we were in the spring and summer of 17. So we had been looking at an ongoing improvement with respect to people's perspectives about where farmland prices were headed. We've now given up those gains going back to the spring and summer of 2017. And of course, one of the big concerns among ag producers has been the trade conflict, especially with China and the NAFTA countries. So we asked producers this month, as well as a couple of other times earlier this year, how likely do you think U.S. agriculture is at risk of a trade war that results in a significant decrease in ag exports? And in July, we saw 54% of the producers responding, indicating they thought that was likely. That's up from 46% in April and 47% in March. And the percentage of people that thought it was unlikely fell to 23% from 30% back in April and 28% in March. So people are more concerned about the prospects of an ongoing trade war than they were earlier in the year. That's obviously one issue. And then we asked people if they expected to see a decline in their farm's net income in 2018 as a result of trade conflicts. And if they said yes to that, and 70% of them did say yes to that question, we asked them to assign within the ranges you see on the screen how likely it was for them to see that kind of a decline. So 29% of the respondents that expected a negative impact from trade conflicts said their farm's net farm income would go down by up to 10%. 36% of the respondents said they expected to see a decline between 10 and 20%. And finally, 35% of the respondents said they expected to see a decline of more than 20% in their farm's net farm income in 2018 because of trade conflicts. We also asked producers about their price expectations, and so specifically we asked them what they expected to see with regard to a trading range for December 2018 corn futures from the time of the survey, which was mid-July, through fall of 2018. And we asked that with respect to December corn futures and November soybean futures. On the corn side, notice that producers were pretty negative. 38% of the respondents said they expected to see December corn futures trade below $3.25 per bushel during that time frame. And on the soybean side, 41% of the respondents said they expected to see November soybeans trade below $8 a bushel before they go off the board later this fall. That wraps it up for the barometer this month. More details are available in the monthly Ag Economy Barometer report on the website. That's at purdue.edu/agbarometer. Our next barometer will be released on the first Tuesday of September, and that'll be September 4th, 2018. Look for those results on the website, and also a lot of detail with respect to the charts that I just showed in this video. Thank you for joining us.